Hello and good afternoon. I'm Lynn Thompson, Strategic Advisor to the Commissioner of the Mid-Eastern Athletic Conference, better known as the MEAC. We are honored again to partner with our teammates at Wells Fargo to bring the Beyond College Web Series to you. Today, episode number 5, and we're going to get into the subject of step-by-step entrepreneurship and the gig economy. We hope you're ready for this one. We're so glad to have all of you with us today, and we sure more are going to be joining us for this episode, the latest one in this great series. Last month, we dove head first into deep water as we charted a path to graduate school successfully. We dropped a lot of knowledge into people, for the students who wanted to research alternatives to grad school. And folks wanted to talk about that, and we got a lot for you today, but let me tell you who we are. MEAC. Well, the MEAC is a consortium of 8 great institutions located along the Eastern Seaboard, and we've been in business for well over 50 years. The MEAC has been educating student athletes and students. I'm sure y'all are aware of who we are, and we decided to partner with Wells Fargo in this great venture, and we're so glad to have you joining us. But it's important that you understand that while we're educating so many people athletically, that's what we do. We get involved in Division I NCAA athletics, sports. We sponsor 14 championship sports. And man, we've got some great institutions. We've got some great teams that are doing some phenomenal stuff. One of the institutions that we want to focus on happens to be the University of Maryland Eastern Shore. UMES, as we call them affectionately, the Hawks, established September 13th, 1886, by the Methodist Episcopal Church Assembly. The Hawks joined the MEAC in 1970 as a founding member of the MEAC. UMES is the number 14th ranked HBCU in America, located on the beautiful eastern shore of Maryland. Graduation rate of 82%. Enrollment close to 2,000 students, and the top 3 majors happen to be biology, liberal arts, social science, and engineering. The top 4 majors actually. And UMES is the first school in Maryland and the first HBCU to add a school of veterinary science. It's a heck of a deal for the MEAC really to team up with Wells Fargo. We're going to showcase all of the expertise that's available at this great company just for you, to give you a chance to meet some of those pros, just like you during the course of this web series. We'll get an intimate look into the elite 8 great MEAC institutions. It's so important that you learn the history of these schools, learn about some of the data runs who walk those hollow grounds in these great universities. Why? Because it's important that you know this history. So many leaders, many of the employees of this wonderful company graduated from the MEAC institutions. And we prepare to dive into this subject matter today, which is step-by-step entrepreneurship and the gig economy. What's the gig economy? Well, you know what a gig is. Everybody says, if I'm a musician, I got a gig this weekend. Well, the gig economy is short-time contracted employment, and that's what we're going to talk about in a little bit. But I'll tell you, why do I say that's important? Because I got to give Wells Fargo that promise. The MEAC is designated into the corporate partners of the year, and they've earned it. Right? Nobody else does what Wells Fargo has done. They have teamed up with us to create this book, but they've done that and so much more. And we're going to hear a lot of the things that they are doing. They've rolled out so many projects and programs that touch all of our lives, including yours. And I think you'll be amazed to hear about exactly what they're going to be doing, what they're doing now, and what they've got planned, not only through the course of this web series, but what they're rolling out in terms of potential employment opportunities for you, and how they do so many things in the banking industry. They do so many things in terms of diversity initiatives. But now it's time for the main course. And I think the main course needs to be served up by one of the main guys at Wells Fargo. And that guy is the go-to guy for enterprise HBCU strategy and external engagement. He happens to be my good friend and brother Dewey Mulgrew. And he's going to take it from here as we're going to dive into this hot subject matter. But I'm going to circle back a little later on, Dewey, to handle the Q&A portion of this. And it's your show now, man. We're going to bring you to center stage, like they say on Broadway, for your solo performance. And you're going to introduce the rest of the cast, including Dominique Garcia, Randy Grant. You got Angel Heyman, and then you got some A-list talent that's going to take it from here. Do it.
Ladies and gentlemen, that's V. Lynn Thompson. Doesn't he have the best radio lead-in voice? Just take Lynn on the road with you. Mr. Thompson always does it. And thanks for the walkthrough there. Love our friends at the University of Maryland Eastern Shore. So glad we could celebrate them and our mighty 8 institutions across the MEAC. Hey, listen, the chat is already hopping. We got folks chiming in. We're asking folks to tell us where you're joining us from. We got Greensboro in the house. We got DC. We got Santa Barbara, California in the mix. We got the 305 of Miami. We got Fort Washington, Maryland, as well as Dallas, Texas in the mix. So at any point, drop in the city that you're joining from. We're just so glad that you're on with us. Team Dewey Norwood, fortunate to be managing our strategic partnerships and the work that we're doing across our broader HBCU strategy. And so excited to be on for today's discussion. All about the gig economy, all about having your own small business and getting you resources that are going to help you along that journey. Hey, we want to talk a little bit about our firm. I hope that folks are familiar with Wells Fargo. $1.9 trillion in assets. 1 in 10 households, 10% of the households across the U.S. in some way, shape, or form is going to have a banking relationship with us. And you see other accolades there and some of the other lines of business that we're connecting in with. I'm also going to drop into the chat in just a moment some really, really exciting news that's come by the way of an organization that used to be known as Diversity Inc., but is now classified as Fair 360. They actually just produced a report spotlighting commitments, better yet, around diversity, equity, and inclusion. I'm going to encourage everyone to take a look at this list. This is their top 50 for 2024, just announced earlier this week out of New York. And you're going to see the name Wells Fargo listed in there in a number of instances. And so I hope that this gives you a sense of our commitments around DE&I and how we're looking to engage with the community. You know, we got to talk about scholarships. Over $120 million that's been provided over the last 10, 12 years, supporting different organizations that are helping students along their journey to and through college successfully. And now over $40 million of strategic investments that have been made to support HBCUs. Going to continue to talk about game plan, and we spotlighted this one for the last couple of weeks. I need you guys to check out our buddy Adelaide Craver. I need you to check out my man Cecil Burrows so you can learn more about this amazing platform. The Game Plan platform is available to all HBCUs and available to college students to help you start building a strong financial future. We actually have modules that we will customize and deliver to your institution or to folks that want to get connected in to be able to learn more. Be sure to check out the Game Plan website. You can hit that QR code. It'll take you right there to be able to learn more. Last couple of slides, and then we're going to get our main partners introduced here for today. Our HBCU Legends program still continues to be really, really strong. Happy to report, team, now that we have 44 different debit cards available in celebration of historically Black colleges and universities and or organizations that support HBCUs. You'll see the list here. You will say, well, Dewey, man, I didn't go to the HBCU. You know what? You can still support them. Go ahead, create that Wells Fargo account, or take your existing Wells Fargo account and change your standard debit card to one of these amazing institutions. I promise you, when you take out that debit card, when you're going out to your favorite restaurant or at the grocery store or the retailer, they're going to notice it, and it's going to be a conversation starter for you around why HBCUs matter and why Wells Fargo is supporting these amazing colleges and universities. Don't forget about our limited edition cards there, the one for the Bayou Classic, the Florida Classic, the HBCU NY Classic, and OBC, the Orange Blossom Classic, which, my goodness, was just a couple of weeks away from by the time we get to Labor Day. Hey, I got to spotlight one of our great cards that's here. Really love this one that you'll see on the screen that Dominique is bringing up. This is the card for the mighty MEAC. This is one of those 44 brand marks that we have that's available. You'll see that card. It is a handsome card. Step in with us, jump out there, get that Legends debit card, and let's continue to celebrate the amazing things that are happening across the Mid-Eastern Athletic Conference. All right, we have covered off on the items that I needed to touch on here. Our ground rules today, team, are very, very simple. Very, very simple. use the chat. If a question comes up for you, boom, throw a thought in there. Our rule around this, when we get to the Q&A portion, we will never call your name out on the broadcast. Certainly individuals will see it in the chat or as you submit items through, but we're never going to call your name out on the broadcast, even if you submit things here. We'll kind of wrap around your general thought or comment, and then in turn, boom, be able to jump into answering any of the questions that come in. And remember, if the question is top of mind for you, I guarantee you there's someone else that has the same question on their mind as well. All right, Dominique, I think with that said, we can go ahead and go to our next slide here. And I want to introduce you all to Derek Canty. He's a senior supplier diversity program manager, and you'll get an opportunity to learn a little bit more about his background. And we also have Jamal Hassan with us, a senior assistant vice president and a senior small business banking relationship manager. You know, Tim, we had an opportunity to meet before. These gentlemen boast nearly 60 years of experience in the financial services industry. You've come to the right place, whether you have a company, whether you're thinking about a company, whether you're in a startup, whether you want to be a startup, whether you want to hang your shingle, or whether you want to start doing things online, you're going to get the principles today that are going to help you along that journey. So Derek, Jamal, so happy to be with you all here for today. Want to turn the reins over to you all. I know you all have some really, really good information to share. And then we're going to just look forward to a great conversation. So Jamal, Derek, you guys take it away.
All right. Well, thank you very much, Dewey. Good afternoon. I'd like to introduce myself. My name is Jamal Hassan. As you can see here on the slide, I've been in business banking and banking for almost 20 years now. And one of the things that I've enjoyed so much, I've had the privilege to work with entrepreneurs of all, from all backgrounds, from all walks of life, is one of the things that really give me life and give me passion when I'm able to sit down and share what I know, right? And kind of give customers an inside view into what banks are looking for, what they're thinking about, and helping them take their business to the next level. So I'm excited to be with you this afternoon.
All right. And I'm Derek Canty, Senior Supplier Diversity Manager at Wells Fargo, and been with the supply chain organization for over 30 years. So I've worked closely with small businesses, working with them from a small level, taking them up to a large scale business. So the journey in supplier diversity is very strenuous, but also provides opportunities for growth to grow your business. So we're going to share a little bit of that information, and I'll pass it back over to Jamal to get us started in our conversation today.
All right. Well, today's agenda is loaded, right? There's a few bullet points here, but we're really going to try to make sure we extract as much value as we can from the time we have with you this afternoon. We're going to try to cover these 7 or 8 points here. Managing credit, what potential lenders may look for. If you operate a small business or you're thinking about starting one, I know that those are going to be some things that, you may have had questions about, you may think about, but supplier diversity certifications are something that my colleague Derek will dive into a little bit and will give you some insight into what that means and how powerful it can be for your business. Then we'll talk about making sense of financial options, what's out there, some things you may have heard about or seen, and maybe some things you haven't. So we'll cover that as well. Our commitments to supplier diversity, Derek will jump back in and really help us understand, what Wells Fargo is doing in that space. And then we'll talk about ways to fund your business. What options do you have? What are some vehicles that are commonly available? And what makes sense for a small business in this current space? Then we'll have some Q&A and we'll bring us home. So looking forward to making sure that we, again, extract as much value as we can from these topics for you. So we'll go to the next slide. So when we talk about managing credit, a lot of different things come to mind. People think about, credit reports, credit scores, credit limits, credit cards, lines of credit, loans, commercial loans, grants, even when we think about business banking. But some of the things that you really also want to think about include things like, what certifications does my business have? And how does managing credit impact that? Derek, what are your thoughts around managing credit from a certification standpoint?
Yeah, when you're thinking about your supplier journey and entrepreneurship, that relationship with a banker is key. And managing your credit, be able to obtain credit, especially when you're trying to bid for products and services, or provide your products and services to Wells Fargo. Doing the request for proposal process is important. So understanding what your credit capabilities could be, because at the end of the day, we're doing business with you, and you're doing business with us, and we have to pay, and you also have to pay. So managing credit is very important in that sourcing process.
That's exactly right. Now, if we can go to the next slide, let's talk about some financing opportunities. One of the things that you really want to do is to make sure you have a good handle on your financial picture, right? And that's what credit really. Credit can be a very powerful tool, right? It needs to be leveraged, and it also needs to be managed. And so when you think about credit for your business, you think about, hey, how can I get my hands on working capital? What utilities are available to me around around that particular facility. So how can I use that to support business growth and to take advantage of opportunities? So when you think about relying on credit for your business, and you're thinking about, what type of support looks right for me? Is it a credit card? Is it a line of credit? Is it a term loan? Is it a longer term real estate loan? You really have to sit down and speak with a banker like myself, or like so many other professionals we have here at Wells Fargo, in most of the markets here in America, to really sit down, help you understand how we provide working capital to small businesses, and how you should leverage that to support business growth. So, we want to make sure that you have a plan, to make sure that things are well thought through, and to make sure that when we extend credit to you, you're actually able to leverage that effectively to grow your business, and it doesn't just become something that becomes burdensome to you. And then along with business growth, also how to make sure that those facilities are on standby or positioned correctly so that you can take advantage of opportunities when they come up. One of the things that a lot of businesses, kind of overlook is that if you're positioned correctly, you can take advantage of contracts that other people may not be prepared for. So, an example of that would be, if you're a small contractor starting out, you've got, a couple of people that work for you, and you want to bid on a large commercial job, and they say, hey, listen, your bid's accepted, but, you're going to have to, front materials and labor costs, for the first 30 or 45 days. We have a solution for that. And if you're ready to go with that, you could start the job immediately, versus someone else that may have to do a little bit of wheeling and dealing to figure out how they're going to get that, set up. The same thing, applies to suppliers as well. A banker can be a very valuable resource if you know how to use them, right? So you would engage with a banker like myself to really help get a clear picture around what the bank is offering, what the bank has available to small businesses and entrepreneurs, and understand, when the bank understands exactly what your business does, how you do it, and how you get paid, we understand how we can play a more important part in helping your business grow by saying, by making sound, financial recommendations. And so we can have that conversation around, now that I understand, who your customers are, what the timing is in terms of how you get paid and how money moves to your organization. Now, I can make some recommendations to you that will solve your current situation, but also understand what things you may be anticipating, or what things you may encounter as you move forward into the future. And so having somebody like myself as a trusted advisor to go along with an insurance professional, a CPA or bookkeeper, can be a very, very powerful team, a very powerful asset for your business.
And to add to, because you bring up a good point around that, that's part of something that we look at in the sourcing process, and how you manage your cash flow. So that really determines, that's part of the scoring process, and having that relationship with your banker to help you provide some details in your proposal about your cash flow, your accounts receivable. Those items will be key in kind of factoring in how we do business with you, or select you as a supplier. So that information is very valuable when you're bidding on goods and services.
Absolutely. Dominique, let's go to the next slide. I'm just going to kind of add to that. For those of you who are currently in school or recent grads, I want you to think back to those accounting classes you may have taken, right? That's going to come back. If you remember them, that they will serve you well as you engage with a financial institution, understanding financial statements, how to read them, how that impacts your business, and being able to talk through that with a banker or financial professional is going to be so key for your business. One of the things that I often like to say when I'm advising customers or even just presenting to a group, I have the saying that I have, which is get your credit right, get your personal credit right. So there's two different types of credit. I know a lot of people will talk about, well, I don't need personal credit if I have business credit. And my response to that typically is there's no business credit without personal credit, right? So banking is all about managing risk. Lending money is all about mitigating risk. And so one of the ways that every lender does this is by looking at a credit profile. And a credit profile will be one of those C's that we talk about in the 5 C's of credit as we go through this. But just, really, if you take anything away from this slide, credit matters, right? Your personal credit matters. And as you're coming out of school or, just starting to work or try to get your business off the ground, you want to do everything you can to protect and preserve your personal credit profile because you're going to build off of that as you go into the future. And so what we want to do is really help you create a sound financial footing. And what does that look like? So you definitely want to have business checking and savings set aside. And most of the tenets of personal finance are relatable to business finance as well. And so, you'll have your operating account just like you have your main checking account. You'll have your business savings account for retained earnings, just like you have, for your personal savings, right? And having some liquidity is key when you're talking about business financing. And liquidity just means money, cash, that you don't have to make a phone call to get to, right? Just money sitting there. A strong payment history, right? Everybody knows or everybody has heard you got to pay your bills on time, but that cannot be overstated enough. Do what you need to do in order to make sure that those payments get out on time and that they're not late for any reason. Then review your personal credit profile every year. Clear up any issues. Over 30% of some of a credit reports contain some sort of inaccuracy, and so you're never going to know that unless you're looking at your credit on a regular basis, at least annually, if not more often. And there's a lot of tools out there available to help you monitor and stay on top of your credit. And then, of course, bank strategically. What that really speaks to is, you've heard the axiom, don't put all your eggs in one basket. The counter to that is you can possibly put those eggs in too many baskets to where when you need to get you need to get a couple of eggs, it's really hard to get your hands on more than one at a time, right? So consolidate your banking relationships. You really don't want to have money spread too thin because then it becomes ineffective to be able to use each of those individual institutions. I would say 2 to 3 banks would be more than enough for most people, and maybe even 3 is pushing it. But you definitely want to have a primary institution like Wells Fargo, and then no more than 1 or 2 others, depending on what it is that you're looking to obtain. A strong banking history, can really support your request for credit. And so one of the things that we look for is, how are they handling their bank account? Are they overdrafted all the time? Do we have a lot of return checks issues there? That can speak to, some red flags potentially if we were ever in a position to consider you for traditional credit, like a credit card, line of credit, or business loan. Having your deposits at an institution can really help tell the story about who you are, how your business operates, and what your needs might be. And then it also demonstrates a consistent flow of funds. So there's not really a whole lot you have to do in order to show that, hey, my business is profitable, it's cash flowing, and here's how you can tell, right? Here's the account. And then, of course, we talked a little bit about it before, but visiting and speaking with your banker regularly, especially if there are any changes that you are anticipating or things that you're even thinking about in terms of, hey, I want to grow my business in a certain segment. Is there anything, that, you may be aware of? So bankers are in a unique position that everybody comes to see us at some point. At some time, everybody will come to see a banker and talk about something. And so what that means is that we're uniquely positioned to where we speak to a lot of people and we're good connectors of people. And so if I have a customer that I talk to regularly and I kind of know what's going on with their business and I speak to somebody else who can really plug into what they're doing, I'll make the introduction. I'll say, listen, I want you to, I'm going to, connect you with, one of my customers and just let you have a conversation around how you two could build off of each other. And sometimes it only takes one introduction to really change the trajectory of your business as it goes forward, as you move forward into the future. And then just have a clear understanding of what your current situation is and what your goals are. So that just means understand what your business, where your business is currently, and what you need to do to get it to where you want it to be, right? And having that plan and having those goals is so important. Derek, any thoughts on that?
Now, you brought up some key points around the having a clear goals. And one of the things we look at is what your future plans are for your business. As we, because we want to, from a contract standpoint, we want to also help you grow, but we want to grow with you. And so understanding your goals and objectives for your business is very key in that contract relationship.
Yeah, I think I don't want to gloss over that. I think you're absolutely right, because sometimes it can sound a little cliche. Hey, we want to understand, we want to help, we want to understand your business. But the thought behind that is really understanding how much you understand about your business first and foremost, right? And being able to articulate what your vision is, what your goals are, and how you plan to get there gives us a greater understanding of how we can help support you in that. So I think that's 100% accurate, Derek. That's a good call out right there. Dominic, we'll go on to the next slide. So we mentioned I made a brief mention of kind of the 5 C's of credit. And so this is a good slide to really make sure you have a good understanding of what's going on here. And so we'll talk through each of these. But whenever you engage with a bank and you have a lending conversation in particular, any request for credit will contain some admixture of these 5 C's of credit. And really understanding what they are and how they can impact a credit decision can help you avoid unnecessary, declinations and denials, and really help you understand where you should focus your attention as it pertains to where you currently are in your own financial situation. So banks and other financial institutions, of course, can look at credit history, right? We talked about that. What have you been doing? Have you been handling it correctly? Are there any red flags? Right there. The axiom is, past behavior is indicative of future behavior, right? So what you've done before, you will probably keep doing, right? And so being able to make sure that history speaks to who you are and what you do, and where you want to go is huge. And so making sure you have a great handle on credit history, of course, is paramount, and that's why it's listed first. Collateral speaks to personal and business assets that may offer some security in case of a default of repayment on any sort of credit. So any sort of facility that does not have collateral or collateral requirement is considered unsecured. And what you want to understand about those types of facilities is that the interest rates may be higher, and requirements, terms may be shorter. So understanding what understanding what you have and what you're looking for. So a credit card is a good example of an unsecured credit facility where there's no collateral required. But a home loan, for example, is a loan that has a collateral requirement, right? With the collateral being the house itself. But there's other different types of collateral, right? You've got accounts receivable can be used as collateral. Inventory can be used as collateral. Other real estate can be used as collateral or any combination thereof. So when you're talking to a banker or at hopefully Wells Fargo, but any institution, that's a question you want to ask about collateral. Hey, if the collateral is not required, is that something that, if I offered it up, would it strengthen my request? So understanding how that impacts the credit decision is key as well. Capital is where a lot of people struggle, especially if they're starting out. Personal investment, and business assets that can be turned into cash. This really speaks to, do you have any money, right? And why we ask that is a lot of loans will have some sort of either cash injection requirement or cash down payment requirement. And so, for instance, if you were to say you wanted to open a McDonald's and you came to us because we're the nation's #1 SBA lender, and you said, Jamal, I'd like to get an SBA loan and open a McDonald's. That's something that we could definitely help you with. But one of the things we're going to ask about is the source of your cash injection, which means, how much money are you going to put into this project in order to secure the loan? And so typically for a franchise restaurant, as an example, we would have a 10% cash injection requirement, which just means as you enter into opening up the franchise, you're going to have to spend 10% of your money on those startup costs, and then we would come behind and finance the rest. So when you think about capital, just think about cash. That's really what it is. And then conditions really speak to what you're, what you really are either experiencing as your personal situation, or what's going on in the market, the local market, and the greater national market and larger economy. And so, for example, COVID, right, was an external condition which really threw a wrench in everybody's process, right, including ours. So we had to learn to look at some things differently. So as a lot of businesses, if you're an established business, if I ask for your tax returns from 2021, 2022, you may say, Jamal, that was COVID. You might see a drop in sales, or you may, if you were in a business that actually did well during COVID, you just say, listen, those sales you're seeing right there, that was because of COVID, and we did extremely well because of the conditions, right? That we were in. Other conditions include, any sort of transition, such as, hey, look, I've got retirement coming up. I'm going to be starting, my first, career type job coming up, or I'm experiencing unemployment right now. All of that is something that, we take into consideration when making a credit decision. And then, of course, the last one is capacity, right? So most banks are going to be what we would call cash flow lenders. Cash flow meaning money that's generated through the operation of your business, right? Do you have sufficient cash flow to not only pay your existing bills, but perhaps any new debt that you would take on? And so a good way to think about this is, if you've ever had a home loan or even a car loan, you may have heard something like debt to income ratio, or global debt service coverage ratio, as we say in business. Those things help us calculate how much money you're making versus how much debt repayment is required on an annual basis. And we look at that to help decide whether or not adding any additional debt would be, feasible. And so I know that from a general banking standpoint, the 5 C's, have a lot to do with whether or not we can do a loan. But also, when you think about engaging with suppliers, the 5 C's can be, of paramount importance as well. Derek, I don't know, did you have anything you wanted to add around the 5 C's from the supplier side?
Yeah, the 5 C's play a factor when we look at what we call the financial risk of any company. And the two areas that we really hone in on is capital and capacity. To Jamal's point, do you have the money on hand to pay not only your employees, but your suppliers that's supplying you products and services down the supply chain? And then we're also looking at the capital of the company. If we want to expand the relationship, do you have the ability to access additional capital for that growth? So as you're responding to your RFPs, understanding the 5 C's of credit is very important, and how you structure that information in your response. So we can clearly understand, what are the opportunities for growth and expansion, what risks you may have that may be exposed to us, and helping us understand what those risks are, because we can come back to you with a solution, or bring in the banker to say, okay, we have a product and a service that can support that. So the 5 C's play a major factor in the sourcing procurement process.
100%. Thank you for that, Derek. Let's advance to the next slide. And then here we have a polling question. So for those participants out there, just put your responses in the chat. We want to find out, is your business a certified small business? Yes, no, or NA. So take a moment and go ahead and put those answers in the chat, and we'll see what the results are here shortly.
Jamal, Derek, we're starting to see lots of things pop in there. So we're seeing some yeses, and then also a question mark to say, define certified. Of course. Okay, getting a C out there as well. We're going to give this another 10 seconds on this side for any last ones. Okay, okay, we got our first no here as well. So maybe touch on those guys and give us 15 seconds or maybe 35 to 45 seconds on certification. What the heck is certified?
Yep. What is certification? So to do business with Wells Fargo, if you could forward to the next slide, to do business with Wells Fargo, any company, small, large scale, can participate in the procurement and sourcing process. Certification is basically that the piece of paper that says that you are a diverse, owned, operated, and controlled business. And you have to have at least 51% ownership. That means owned, operated, and controlled by a group of minorities, or what the gender segment would be women, LGBT, veteran-owned. We do accept small businesses based on the SBA size standard table. That can be anywhere from a business being number of employees based on your industry category. So say you're in the painting business, as long as you have employees, less than 100 employees, you can be certified as a small business. And so part of Wells Fargo's supplier diversity program is we require that every diverse supplier that we do business with is certified by a third-party certifying entity. We do not self-certify companies within our process, nor do we accept what we call self-certifications, where you're just basically self-identifying yourself as a small, diverse-owned business, but you don't have a certificate or a proven document. You can be certified by the city of Charlotte, or in a government programs. The programs that we recognize are the National Minority Supplier Development Council, the Women Business Enterprise Council. There's a certification for organizations with people with disabilities. And so certification is a key component to our overall program. And I can provide the links to our website where all of the information around how to get certified is available. Yep. So connecting with Wells Fargo and the Supplier Diversity Program, in 2023, we spent over $1 billion with diverse-owned suppliers. This is our 10th consecutive year spending over $1 billion. And that's everything from construction, janitorial, landscaping, consulting services, staffing services. As I tell suppliers, pretty much we buy everything under the sun to operate our business. One of the key things that we do is help suppliers develop their capacity. So we partner with various organizations like the National Minority Supplier Development Council, the Women Business Enterprise Council, in helping suppliers develop their capacity, whether it's sending the CEO to education programs to develop additional skills on how to grow the business, or sending the entire management team off to Tuck, the School of Business, to understand how to grow the business and take it to that next level. So we have a variety of resources that we can provide small businesses on their entrepreneurial journey. And Jamal, I think I'll turn it back over to you to go into the next slides.
All right. So let's talk about what lenders might look for while Dominic advances to the next slide for us. So there are a number of different things that, sometimes business owners just like, well, what do I have to do in order to get a loan? What do I need to do in order to qualify? And so one of the things that, one of the benefits of talking to a banker is we can help prepare you to access capital. One of the most powerful things that we can do is help try to put you in a position to have success. And so being able to speak to these 4 topics will really put you in the best position to be able to gain access to capital from traditional sources. So being able to speak to exactly what the money will be used for. This is something that is very, very true of open-ended credit, like lines of credit, credit cards, and so on. Being able to explain exactly what you're going to use that money for. So it's a different conversation to have with a banker when you say, hey, I need a line of credit. And then I say, well, okay, what are you going to use the money for? Well, I just want to have something on hand in case of an emergency. Okay. Tell me a little bit more about what your plans are. And you say, well, listen, I just want to have something, I just want to kind of just use it to maybe, invest in real estate as an example. So you really want to be intentional about making requests like that and clearly stating the purpose for the credit. So whenever banks are issuing lines of credit, as an example, we're going to look at, so how does this line of credit support your cash flow? And so if you have contracts, for example, where you provide services to customers, and those customers will typically pay you within 45 to 60 days, that's going to be a perfect reason to have a line of credit, right? So you're going to have bills that are due every 30 days, but you're going to have payments coming in every 45 to 60 days. And there's a gap there of 15 to 30 days where a line of credit makes sense. And so being able to talk through that with a banker and demonstrate the need for the credit facility really helps paint the correct picture to underwriting, makes you a little bit less, and kind of helps us understand why we would be doing this. Credit history again comes back up, and being able to speak to anything that may have had an adverse impact on your credit. I've said it before, and I'll say it again: get your credit right. It's never too late to start. It doesn't matter how overwhelming it may seem. Just get started. Time will help you with a lot of this. But if you have had some things go on, being able to speak to exactly what that was. And listen, I had an accident. I was out of work for 6 months, or I had, the death of the primary breadwinner in the household, as an example. Just being able to speak to, hey, look, COVID was a thing, and that really had an adverse impact on us. And just being able to understand exactly where the source of any adverse action or negative information may come from helps us understand that you're managing the business. You can speak to these things and you understand exactly what happened and how to recover from it. And then the company's finances. This is where I mentioned, okay, those accounting classes are going to be important. So hopefully you did not sleep through those, but you were able to kind of take away some of the core concepts. But being able to speak around, profit and loss and balance sheet, your taxes, your gross annual revenues, the various aspects of your company's finances will help us understand how we need to structure the request in order to give you the greatest chance for success. And then, of course, the application details. They say the devil is in the details, but I think the approval is in there, right? It's what it really is. So ensure that you enter all information accurately. Make sure that what you're sharing with the banker is actually what's going to be on the verifiable documents. So if you say that your business made 1.2 million, if that's not something that we can find on your tax returns, that's going to be an issue, right? So just making sure that every I is dotted and every T is crossed, and making sure that you have a good game plan around the use of funds is really going to help increase your odds of approval. So let's go to the next slide here. All right, so we're talking a little bit about enhancing your cash flow. And so what that really means is, how do I speed up collection of money from customers, and how can I delay payment to vendors or other creditors for as long as possible, without incurring any sort of negative impact to my business, right? So when you think about these things, you want to accelerate your inflows, right? Make sure you have a good system in place for your invoice processes. I know a lot of people like QuickBooks. There's all kinds of different software out there that will help you with this. I think HoneyBook is a thing. Wave Accounting is another. And offer your customers more payment options, right? So if you only take cash, consider signing up for Wells Fargo Merchant Services, where we can help you process credit card payments. Think about, will you accept wire transfers? Will you have an account dedicated to receiving money from customers that want to pay you via ACH? Just anything that customers can do to help put money in your pocket as soon as possible will help enhance your cash flow. And then, of course, monitoring your costs, tracking your bills and inventory, know your payroll obligations, knowing when, how much payroll is, how much money you need to have on hand for that, but tracking your bills and inventory, right? So if you're tracking your bills and you get a bill on the 15th of the month, but it's not due until the 1st of next month, you don't have to pay that bill right now today. Just go ahead and plan that, schedule that on your bill pay, or however your bill manager or however you're doing it, and let that thing go out on the last day of the month, right? Just as long as they get it in time, right? And that's more time that money can sit in your account that that you can use to help grow your business. Um, of course, managing your outflows, that's another part of a little bit about what I was talking about there. And then of course, ask for different things if you are going to, or if you have the ability to pay early or pay more frequently. That's an advantage to you, and you can use that to negotiate with suppliers. I'm sure Derek will jump in here and let us know how that, talk a little bit about that. But say, listen, if I pay in less than 30 days, can I get 5% off, of whatever the total invoice is? And most suppliers are like, look, you want to pay me faster? I'll take a 5% discount. And you can barter and do things like that to try to help, manage your outflow. So you just save 5% just for paying a little bit early if you decide to do that. And then of course, making sure you cover your taxes. Um, as a lot of people are aware, the IRS has added more muscle, right, into its ranks. And so you really want to make sure that you've um, done the work around making sure that the taxes are taken care of. You don't want to have back taxes piling up. And one of the ways that you can do this is by taking advantage of payroll service like our partners over at ADP, where they'll run your payroll for you, they'll calculate the taxes, pay them for you. All you have to do is make sure the money's in the account, and then they literally do everything else for you. That needs to be key, especially if you have people that are on salary, but also as business owners, it's important to make sure that you have your salary reflected correctly, and that it runs correctly through your business for the purposes of borrowing money. Um, and then just challenge everything, right? Just because it works today doesn't mean it's going to work tomorrow. It doesn't mean it's the best option going forward. And so push back on things on the status quo. Is this relationship doing what you want it to do? Does it provide? Are you getting your materials fast enough? Are you getting the services you expect? Not only fast enough, but at the level of quality that you expect and that your customers demand. And is there any way that you can cut expenses? So expense management always remains a thing. And so these are just five of many, many steps that you can use that you should be considering when it comes to enhancing your cash flow or helping increase that cash flow. Derek, before we go any further, any thoughts around, what we talked about in terms of negotiating discounts with suppliers or anything like that on that last bit?
Yeah, I mean, we do negotiate discounts with suppliers it's really based on the product and service that we're procuring. And there's some advantages of the early pay, getting that 5% discount. And then, we provide you early pay because our terms can be anywhere from 90 to 120 days of payment. And one of the things as a business owner, you have to understand, can you float your bills that long until you get paid? And so the key point that Jamal mentioned, challenge everything. You have to look at that at your own supplier base. You need to negotiate with your own suppliers on the terms to make sure you have the cash on hand to not only delivering products and services, but to pay your employees. So it's a key factor in the way we look at it from a source and procurement standpoint.
Absolutely. Dominic, let's get to the next slide and talk a little about the credit life cycle. So this is a slide that kind of helps us understand what options there are, right? And so as a banker, one of the things that I'm often guilty of doing is doing what's called banker jargon or banker speak. We have acronyms for everything, but a lot of you may have heard of these things. Of course, we have credit cards, lines of credit, commercial real estate financing, commercial loans, SBA loans and lines, and healthcare financing. I think a lot of people are somewhat familiar with the first two options being an open-ended credit, which means that there's a limit and you borrow and pay back up to a certain limit. And so I think most people understand credit cards and lines of credit and the need to pay them off regularly. You really don't want balances sitting out on these types of facilities for too long. The interest rates tend to be a little bit higher because they're unsecured. But again, these are things that people are fairly familiar with. What people may not be as familiar with is the options that we have around commercial real estate financing. And so when you grow your business to a certain level, it may make sense for you to seek to buy real estate. And you can buy your location where you operate your business if that's an option. A lot of people start out renting. They will often do what's called a lease purchase, where they'll start off with a 5-year lease with an option to buy that property within the first 5 years. And we have options there for you. Oftentimes, if you think about it, whoever's charging you rent has to make some money on that. And so if they have a note, whatever they're paying, you're paying more in rent, right? And so one of the things that businesses will do to reduce their expenses is to do something called rent replacement and actually buy the building or land where they operate. And the costs of the debt service or the payments on that are often less than what their rent payments were on a monthly basis. Another good resource is SBA loans and lines. This is something that a lot of people are not familiar with. They've heard of the SBA, and they have heard one or two things about it. They don't really have a good understanding of how it works. But this resource is highly leveraged in business banking. You have people who are, maybe permanent residents that come over, they gain their citizenship, and the first thing they do is they turn to the SBA for financing. So if you're looking to start, expand, buy into a business, the SBA is going to be a great way for you to do that. Depending on what you're looking at doing, you may, put down as little as 10 to 15%. But I will say for some, special use in high risk industries like restaurants, as an example, you could be looking at 20, 25, 30%. The good thing about, the SBA program, especially here at Wells Fargo, is that we offer fixed rates where most other lenders will offer variable rates or adjustable rates. And then if you're a medical professional, right, if you are a dentist, optometrist, a physician, or veterinarian, we have our healthcare industries group that can provide what's called practice finance. And this is a segment of lending that is specifically reserved for medical professionals in those spaces. And they come with a variety of different perks that can be very flexible, very attractive. And in some cases, you even have access to 100% financing. So for those of you who may be, dentists, optometrists, physicians, or vets, we have some options there for you as well.
And the polling question, as a business owner, could you use additional funding to support your business? So if you can take that poll. I wanted to add to the SBA piece. There are some free programs through the SBA on how to start your small business. So if you go out to sba.gov, there's a lot of reference information out there on starting your small business, financing, as well as how to be certified as a small business. So great resources by the SBA.
Yeah, business plans, cash flow projections, all that stuff is there for you. So go ahead and put your answers to that in the chat.
Yes. And Derek, Jamal, those are coming right in, and 100% saying, show me the money.
Jerry Maguire, show me the money.
Come on, young cats, they don't know nothing about that. But anyway, yes, everybody is saying that the cash infusion could be value added. And I love the resources that you guys have mentioned there. Hey, while I've got a mic here, we're getting down to our last couple of items for our partners that are on. As a reminder, the Q&A is open for business. Go ahead and start populating those items in. We're going to be bringing Mr. Thompson back on here in just a few moments to jump through those items and keep moving. Gentlemen, a lot of great information. Let me give it back to you.
All right. So we've talked about a lot around credit. Traditional financing is what we call it, where you go to an institutional traditional source of financing. But we do understand that, oftentimes, there are some, borrowers who would benefit from other, what we call alternative lending options, where they may not have as strong of a focus on credit or capital or what have you. And before I get into those, I do know that, for the nonprofits out there, even for the for-profit businesses, oftentimes, a lot of one way that people often jumpstart their businesses or look to jumpstart their businesses are through grants, um, and other resources through large companies like Wells Fargo or municipalities like the state, Virginia, North Carolina, or even through government entities. And so one of the ways you can learn about what we do and where we focus our giving is to go to wellsfargo.com. Go to wellsfargo.com/about corporate community dash giving, and we'll have a lot of it. We'll put that in the chat. Don't worry about writing that down, but we'll make those links available to you. You can learn about our philanthropic arm, the Wells Fargo Foundation. You can also visit welcome.wf.com/impact to find out what Wells Fargo is doing to make our community stronger, how we fund scholarship, and pursue things like affordable housing and some of our other corporate initiatives. So those will be coming to you in a post-event email. Keep your eyes open for that. There'll be some very powerful resources there for those nonprofits and other businesses that are looking for such things. But to get into this, you can often complement traditional financing with alternative or more creative financing, such as seller financing. This can be done even with SBA loans. So I know oftentimes if there's real estate involved or particular types of transactions, the seller can provide, what's called a seller note for, 5% or so, where they hold back a certain amount and you pay them, and we front the rest of the costs along with your cash injection. Sometimes this has been done in real estate where people will, speak to, a seller, and they'll say, hey, listen, can we come to terms? And you do a seller note for me. So that's seller financing. And you really have to speak to the seller to understand what their appetite for such things would be. But this is something that, can kind of work with close acquaintances, family members, that sort of thing. Community development grants, again, kind of talked a little bit about that, what Wells Fargo is doing. We'll have that information out to you. But community development grants can be had, again, from large corporations, governments, municipalities, that sort of thing. So visit those websites wherever you live in your city. Their Office of Economic Development will be a good place to start. Mission-based lenders, peer-to-peer lending, and then to a lesser extent, factoring. I will just give you a word of caution there. Factoring can be extremely expensive. So let that be your last resort, if I can express an opinion on that. But it is a thing that an avenue that some business owners end up taking advantage of. Derek, any thoughts about some of these alternative lending options that business owners are, may turn to?
No, they all play factors. When you look at the Community Development Fund, CDFI grants, and getting access to those funds. Also, I've seen companies leverage a venture capitalist to really get them the cash flow that they need to get the idea or the business off the ground. So these are all factors that we look at in the source and procurement process, because we need to understand where your funds are coming from and the variety of funds that you have to service the relationship.
Yeah. So I know we're approaching Q&A. So Dominic, let's go to the next slide. I want to make sure we squeeze and extract every drop of value out of what we wanted to talk about today. And then, of course, in a nutshell, we provide banking advice. So we are not legal or tax or investment professionals. We're banking professionals, and so you need to take that under advisement. We're not, saying you're not to rely on anything we're saying is, 100% this is what's going to happen. But really think about engaging with a legal professional, tax professional, or investment advisor around any specific questions that you might have, because so much of what we do kind of interfaces with those industries. So we will just make sure that you understand that we're speaking specifically to banking and credit, not legal, tax, or any other type of investment advice. So just a brief disclaimer there. Let's go to the next slide. All right, this is where the rubber meets the road, Q&A. I'm going to turn it back over to Dewey and our colleagues to take us through the Q&A portion.
Absolutely. Jamal, Derek, some great information there. And thanks to the folks that were dropping comments into the chat. We're going to continue to utilize that during our Q&A segment here. So, Mr. Thompson, want to go ahead and bring you back up as well. I know that there may be some questions that you have. And Jamal, Derek, I'll pitch one to you just as an easy kind of starter here for me. Let's say that there are some scholars on that are still in school. How do you balance through hanging your own shingles, starting your own side hustle while you're still focusing on those 12, 15, 18 hours that you're taking? Can you walk us through any suggestions there?
Derek, if you don't mind, I'll go ahead and jump in first. I would say make sure you focus on those 15, 18 hours that you have to get done, right?
Come on,
So
man.
one of the things you don't want to do is stay in there longer than you should or longer than you need to. But it can be important to, really start something part-time. Invest a few hours on the weekends. If you're done with your classes early in late afternoons, evenings, and start to build a customer base and just do some small things, right? Because that's something you can easily parlay into, a larger strategy once you have more time on your hands to pursue it full time. So I would say, make a plan, really think about the demographics in your area, what you plan to do, where the opportunities are, and then see how you can address those to help, make money. And then once you're operating that, you have the foundations, you're operating a business at that point. And then all you want to do is put the pieces around that, right? So start tracking what you're doing, right? Get a business checking account where you can, make sure all your transactions run through there. If you have, a small credit facility, make sure you utilize that responsibly. It's going to be important as you're in school to make sure that you don't that you manage credit responsibly, because this is where college is where things kind of fly off the rails for a lot of people, and they spend their entire early 20s trying to get it back on track. So just make sure you keep a tight grip on your schedule and really just put the pieces in place around what you're doing to really start to formalize what you're doing. File your tax returns, right? As an example,
Yeah.
do your profit and loss and balance sheet. Huge things. Derek, your thoughts on that?
Yeah, you pretty much I'm thinking about Michael Dale. He started in his dorm building computers for kids on campus. And so it's, big idea, but think small, start small, right? Just start small, because you're not, you might have a great idea and you might need to test the market with it. But set your expectations, because it's funny because my daughter did the same thing while she was in school. Tried to start a small business, and I was like, okay, now she's not going to class, so we got to have a conversation. So we had to change the paradigm, but she stuck with it, right? She stuck with school, but she took her business and just started out small and just really focusing on a customer base that needed her product. So that's what I was saying. Start small.
Jamal, Derek, love those pieces. Mr.
Yeah.
Thompson, we've warmed them up with the easy ones. I'm gonna let you
Yeah.
go to the 30 level, 301 level questions. Go for
And
it, sir.
I want to encourage participants out there, students and scholars, drop some questions in the chat box, and we'll raise them up. But I got a couple of questions here that folks have always it's shot to me as well. When you talk about starting a company, let's talk about that process. LLC, total incorporation. What's the best way to start?
I would say probably what you want to do is really understand how to structure the business. And I think the good place to start would be to engage with a bookkeeper or CPA that can really explain to you kind of the tax implications of certain business structures. So oftentimes people say, oh, I'm a single member LLC. But then there's different sorts of variations on that, right? So you've got corporations, C corps, S corps. You've got LLCs, PLLCs, limited partnerships. All these different types of ways you can form. You can form your business. So get with a CPA, I would say, or bookkeeper, to really help you understand what the implications would be from a tax perspective, and kind of build off that. And then just, of course, make sure you get an EIN, at least for banking purposes. You can do that at irs.gov for free. I think you can, and you'll get that information. But definitely, I would say start with a CPA or bookkeeper.
for the students out there, if they walked into a Wells Fargo branch, is there anybody that would be able to steer them to somebody in the organization that could answer some basic questions?
Yeah, so most of the time, there are going to be certain levels of teammates that are going to have certain levels of expertise, and so if you're able to speak to a branch manager, or premier banker, small business branch banker, any of those three would be able to kind of point you in the right direction in terms of how to get started in business. But as long as you have all of your personal information, you've got an EIN number for your business, and you've properly formed it with the local state corporation commission, and you've got your articles of organization or articles of incorporation, which are formation documents that establish your company, you usually should be pretty good to go in terms of getting started. But after your business has been in operation some time, and you start to need more complex banking services, then you would come see somebody like myself, commercial banker, that sort of thing.
Here's a question. One more question that I want to raise, and then we want to go back to the chat. And this is for Derek. Derek, when you talk about getting certified, diversity certification, let's say I was a guy that just started out and wanted to get certified. I do know that there's some opportunities where folks would want to partner with me. I got a good idea, and maybe a company would want to partner with me. Are those opportunities still prevalent, or do I have to go through a process that really a stringent process that gets me up and ready to I guess to get certified on my own, or do I get a partner to shepherd me through this process?
Sometimes it's easier to go in with a partner that may already have that certification, but the process, depending on where you get certified, whether it's the say city, state, or county, those processes are pretty simple. And where you get into what I would call those higher level of certifications, where they're asking for financial statements over a 5-year period, those will take time because you got to have the audited financials. Yeah. But I would recommend anybody that's just starting out, just to start out with the city and state certifications first, because it's sometimes it's less than $100 to get certifications, where some of those national certifications can be anywhere up to $1,000 or more. So
here's one from the chat for any one of you guys. What's the good debt to equity ratio that meets the bank's risk tolerance for small business?
So I don't know if there's necessarily a good debt to equity ratio, but if you're speaking towards like more of a debt to income ratio, or then I would say on the business side, we use something that's called global debt service coverage, which is a ratio that we want to see that's over 1.25 times. And all that really means is that if we add up all of your income from both, your personal income and income from every business that you own, and we stack that up against the payments that you're required to make on an annual basis to all business and personal debts, if that income can cover that debt service at least 1.25 times, that's considered to be, an acceptable debt to income or global debt service coverage ratio. And anything higher than that, of course, that just makes it all the better.
Okay. Here's another question. For students who are just entering the workforce in this economy, isn't it an advantage to have a job and start a company on the side versus diving in head first, like your daughter was trying to do from school there, and say, I'm gonna do both? What's the advantage? And what would you do if it was you 25 to 30 years ago, if it was you? You want to give yourself advice?
Derek, you want to take that, or?
Yeah, personally, I'll go work for somebody for a little bit and try to build a business from there. Yeah. Because there's a lot of things as you're starting out your career, there's a lot of things you gotta understand out there. You gotta understand people, right? And because at some point you gotta hire individuals, so you gotta know how to manage them. Then you also need to understand definitely your cash flow, but also what is happening in the marketplace. So that gives you time to do some research in the industry that you really want to go into. Understand the competition. That's the number one thing I ask a supplier. Do you know who your competition is in the marketplace? And then how do you compare with them? So I would say start out, unless you have, now I've seen people that create software applications and overnight, they're selling it and making millions. So if you have a solution that the marketplace is in need of, jump at it. But I would start out, getting a 9 to 5 somewhere.
Um, Here's two more questions. One just popped up as we're talking. What do you think is the best option when trying to apply for certifications for a business and for an app when you haven't even named it yet?
I don't recommend from a supply diversity standpoint. I recommend after you've been in business 3 years that you then go out to obtain the diversity certification. I've seen some companies just go out there and go get it. But for us, we're going to need to know that there's a track record, a history of you providing that product or service to the marketplace. And because there's going to be a lot of unknowns when we bring in a company just, day one. That's something we typically don't do. And plus, we really don't engage a lot of sole proprietorships in our sourcing process because it's very challenging just from the sourcing procurement standpoint, the amount of paperwork that you have to do just to bid and understand the bid. So I recommend that you look at certifications maybe year 3 in your business. And there are some advantages of being certified as a diverse-owned company. There's a lot of companies that support minority-owned businesses with programs like we have here at Wells Fargo. But I would recommend year 3 to look at that as an opportunity.
In this gig economy, and I'm asking, Dewey, how much time we have left?
Mr. Thompson, let's do this. Let's take another 2 to maybe 3 questions maximum. So you probably got another 5 to 7 minutes, sir.
All right. So folks, those of you who are in the chat room, we got a couple of opportunities for some questions. We want to make sure you get all your questions in, and we still have, even if they come in late, we'll still have an opportunity to get some answers back to you because we want to make sure we get all these questions answered. And while we're waiting on you to type them in, here's another question. Even in this gig economy, where folks bounce from gig to gig, we have seen folks and young people in particular who roll the dice, and they are gambling on the next gig, but they are not forecasting what the benefits will be down the road. And so how do you counsel people about that? Retirement, insurance, and things like that. They're just going from job to job. So how do you talk about those fringe benefits and things like that rather than just check? Because if you're going to be running a company, and I think Derek, you talked about it. You're talking about knowing your competition, knowing the marketplace, managing people, being a real executive. Payroll, personnel, you've got to talk about benefits, stuff like that.
Yeah, that's a, you got to plan for the future, right? And you gotta really research what's happening out there in the marketplace, because now we have AI. Right. And everybody's jumping on that bandwagon, right? And coming up with their AI solution. There are some pros, there are some cons to AI, right? And it's gonna impact, it's gonna provide opportunities, but it's also gonna have an impact on resources. But there's a huge investment in that particular marketplace. So that's why I say the research depending on the industry, you have to do your research to understand where the market is going and who are the market leaders, right? Because you may have the same idea that the IBM has, but their speed to market is going to be a lot quicker than yours. So really understand where your entry point will be in the marketplace and how effective you will be against that competition.
Yeah, and just to add to that, I would just say, just make sure on the planning front, that you're forecasting your income appropriately. That way, you know how much time you have before you have to do your next job, right? And you're kind of able to kind of go in and kind of solve for that ahead of time before it becomes an emergency for you. That's called irregular income planning. And there's a different type of budget that you can use to help kind of forecast your way through that.
And I guess it begs the question, Derek, of the advantage of having a job, working for somebody else and learning these skills, building up some capital that you can afford to invest or roll the dice, and develop your own company on the side, I guess, you know?
Yeah. My daughter used my capital, so I'm still waiting on that repayment.
Well, you can definitely take a different type of risk when you're young. If you don't have children, you don't have large commitments like house, car, that sort of thing. It's
Yeah.
a whole lot easier to shoulder a little bit more risk that you can use to start a company. So
Yeah.
100%.
Yeah.
And D. Canty, I hope that your daughter gave you an equity stake in that business. So, 1 or 2%, scholars, but when these opportunities present themselves, hey, pay me an equity. Pay me an equity. That's a Mr. Thompson, that's a free one. That's a free
Yeah.
one.
Yeah. And the interest rate was real low too, right there.
Oh yeah. I'll see if I get an equity payment on Father's Day or something.
There we go. Get an extra tag.
Long forgiveness.
Something. Mr. Thompson, let's do this. Let's take maybe one more. You give it back to me by 25 past the hour, if that works.
And that's fine with me. And I just want to encourage all our participants to use this chat because we got some good information here. And I know some of y'all sitting here listening. I hope you're taking notes. But look, we got some pros here. They're just begging for you to ask them some questions because this is the perfect opportunity. You are growing up in this economy. This is a phenomenon that has never happened before. And you got an opportunity now to ask some pros on how to navigate this in this space right now. And many of your friends don't have this opportunity right now. So I want you to raise some questions, man. We just got a few minutes left. We got actually less than 5 or 6 minutes here to do this.
I'll throw something out here while we're waiting on the next question. It's just a piece of advice, and I gave this to some students that we engaged with recently. Get a handle on personal finance, right? And I said it's kind of at the beginning, but learn all you can about money and how it works. And if you can be successful with personal finance, business finance will feel a whole lot more natural to you. You kind of demystify the whole process. So get your education around money and finance and don't learn all you can learn about it. And then that way you can engage with financial professionals a little bit differently, and a little bit more successfully, I would say, to get the results that you're looking for.
What's step one for them? Because I know a lot of times, even in your own home, that's something that's never talked about. Generationally, it's not talked about. But nowadays, I know that even in high school, you had to join an organization. There's some school systems don't even teach, those types of things, business and investment. They got clubs that do that, but for the most part, and even those might be electives on the college level. So how do you broach this subject socially with your peers?
You know what? That's a great question. And I would say right now, while for those of you that are, still in school, in college, or those who are recent grads, you have made some very important connections, on campus, off campus, with certain individuals. And oftentimes what I've seen is that, a couple of people will get together who came up in college together and they'll start a business, right? You've got ideas, you've got, a lot of opportunity. You're close to the innovation and the evolution of technology. You're next to people who already done some of the things that you want to do, but you're able to kind of bring fresh legs to it. So look around, the opportunities are there. Where you'll be able to partner, to connect, to join forces with some of your colleagues that you've grown to know and love. And oftentimes people will go say, "Hey, listen, man, let's go start a I don't know, like a Burger King franchise together, or let's go open a Papa John's or a this or that, right?" You say, "Hey, listen, here's the plan. I'm going to work a couple of years, save up some money, keep my expenses low, and we're going to go for it with somebody that you know and trust." And like I said, the knowledge is there all around you. The connections are there, and so leverage them before they kind of fade into the background.
Here's a question. Are there any books or even YouTube channels that you all would recommend for more business or credit information?
I would say, as far as resources, I think the resources abound. If you're looking for YouTube could be a great resource, but it can also be a little bit skewed, right? Sometimes you have to be careful what you consume there. But a good thing to do is to, even if you're not, like, let's say, in the school of business, you can, connect with somebody in the school of business or in that teaches finance to say, "Hey, listen, where are some good resources that'll help me get a handle on X, Y, and Z? I want to learn more about credit, finance, business finance," and let them point you in the right direction.
Yeah.
Or find a business owner. I would
Or
recommend that.
somebody doing it. Yeah.
Yeah, that's the best way to learn.
Derek, would you say that folks are comfortable with those kinds of conversations? And then we'll wind it up with this one. Maybe we'll get a closing thought from you all. But can you approach someone that's in an industry? Maybe you are interested in marketing. Do you find somebody on LinkedIn, engage with them there? Or somebody that's, again, got a landscaping business or web designer, man? How do you have that conversation with them when you know you're trying to go win some of the business ultimately? How do you do that, man?
Yeah, I've seen it done lots of ways, but
Sure.
normally going to industry events, being at, at social events where you can just strike up a conversation and say, "What do you do?" Because people love talking about what they do. So,
Yeah.
Yeah.
That is
Be
so true.
bold. Be bold.
yep.
Hey, here's a great question that I think we can close on, Dewey. And this is something that probably shuts down every great idea, even the passionate idea. How do you deal with the fear of failure, possibly slowing down your level of consistency?
And
Um,
success.
Success, that's right. Or the fear of success. I'm scared to death that I'm gonna be a success.
just feel the fear and do it anyway. Just accept it. You're gonna make mistakes. You're gonna trip and fall. But the sooner you trip and fall, the sooner you get back up,
That's
right?
right.
And you understand what you did wrong. You say, "Listen, yeah, you won't get me again."
Right.
But
Well,
just be persistent.
I guess, procrastination is something that I never knew what it meant. I just said I was a professional procrastinator, because I never knew what that word meant, but I said, okay, I mastered the art of procrastinating. So I was a professional at procrastinating. And many times, great ideas that I had died because I didn't do something about it.
Right.
But I just decided I wasn't going to be scared anymore. I got tired of looking at the failure in the mirror and decided I was going to beat him, and look, don't be afraid of being a success. That's who you destined to be, is a success in something. So go ahead and do it. And you got all these resources and resource people that's willing to pour into your life and invest in your dreams. Like Julie, like Derek and Jamal. That's why they're partnering with the MEAC, Wells Fargo, with this phenomenal company doing this web series. So Julie, thank you, man, for what you guys are doing.
Mr. Thompson, thanks for the masterful walkthrough there on the Q&A. Jamal, Derek, thanks for all the information you shared. Scholars or anyone listening to the replay, please make sure that you're connecting with these gentlemen. You can find them on LinkedIn. You can catch them on email, or you can circle back with us, or even reply back to the note with that you're going to be getting in a little bit with the reminder for your survey to keep the conversation going. Derek, give them one word to close out, and then Jamal, one word that they need to hold on to as they're closing out. Either one word or one statement that you want them to hold on to.
Continue to think big. Don't be afraid to take on that challenge, but also learn from those challenges.
It's Derek Canty.
I'll just echo those sentiments. Be fearless, right? Just get in there. Get in there. You only need to, you might fail 100 times, but if you can strike it, if you can hit it right just once, it'll change your life forever.
Yes, sir. We love it. Team, thanks for the great information. We're going to run over our closing items here and just give you some quick reminders as we get everyone onto their evening with things. So from the reminders perspective, Beyond College webinar series is running. Mr. Thompson mentioned it. This is number 5 of the year. And you'll see some details on the next slide about how you can access the playback of what we have. You can jump on to the MEAC's YouTube channel and their digital network to access playback for our January, February, and March session. Our April session should be on in the next couple of days, so you can revisit the graduate discussion. And in that same location, we'll be posting the content here for today relative to entrepreneurship and the gig economy. Hey, in June, we're going to talk about securing the bag. This is a new title for us that's going to be coming from our wealth and investment management partners. So how do you make sure you're protecting the nest egg for grandmom, for granddad, for auntie, for uncle, and then making sure that you're starting to build for yourself as well? So we're really excited about the new content that we'll be sharing in June. And then the next slide, as we get to July, I'm pushing for it. I need 3,000 registrations for our July 25th session. 3,000 registrations. Everyone on the line, if you bring 11 people, we'll get to that number. Help us get there. Share the information. We want to fill the lines there on July the 25th. I see an internal partner, and I'll shout him out in KJ Vincent. KJ and his team are in the midst of a recruiting phase now and talent acquisition phase and other kinds of areas. And he and his team will be sharing information about, not this summer, it's too late. Summer is here. Memorial Day is a week and a half away. It's too late. You've got to start preparing now for 2025. The same way you prepare for your business, you've got to do those same things, team, on the career pathway. So KJ, so glad that you're on with us, Doc, and excited about the information that you're going to be sharing in that important session in July. In August, we'll touch on success strategies, the finance edition, all for paying for college as we head back to campus. And then we'll do a 1, 2, 3 punch when we get into the fall, social media smarts, unboxed credit matters that matter, one of our favorite sessions of the year that we deliver during Get Smarter About Credit Month. And then we'll wind it up in November with a session from Iwana K. Brady and team on the topic of your pathway to home ownership. Again, a new topic, but one that we know is of great interest to many of you all in the days ahead. All right, I think our last couple of slides here are really simple ones. I think there's some additional reminders here. Huge shout out to our amazing partners facilitating the work around the A Different World tour, returning to a campus near you in 2024. So I hope that many folks have been able to check out the great stuff that Daryl Bell and the character and the cast have been doing relative to that amazing platform. Hit that QR code, learn more. And if you'd like to get them on your campus, go ahead and fill out their request form to get connected in, and stand by for additional events that will be coming up during the fall. All right, and I think last but not least, we've got some final reminders. I think it's important to leverage the information that you've received today. This conversation, the playback of it, or what you've heard, can be your catalyst for setting up that meeting with a premier banker, as Jamal talked about earlier, with a business banking partner, to have that conversation. You've got the QR code here now. Hit that page. Go ahead and get those appointments set up, and then come back and report to us. Hey, I was able to meet with X, Y, and Z, or caught up with Jamal, or caught up with Derek, and I'm submitting my information for consideration. Keep us informed, or throw a post on social media that spotlights what you were able to learn or what you started to apply to your personal journey. We touched on the talent community earlier. Huge shout out to Leroy Clark and Damu McCoy and all of those amazing leaders, Calvin Thompson and Ayanna Collins and Alex Vanover. I can keep Ruth Armand. I can name recruiting team members all day relative to things, but stay connected there. And then you also saw a few of the details around our Life Sync program and platform as well. So with that said, again, I want everyone to have a great, great rest of your summer. Many of you are all going to be crossing the stage and receiving those diplomas in the days ahead. Many of you maybe have already finished for the year, but let's continue to stay focused. Let's have an amazing, amazing summer. Let's get the things done that we need to do on internships and in other kinds of areas. And be sure to join us back in June as we touch on securing and protecting the bag with our wealth and investment management partners. I want to give a huge shout out to the MEAC team, Dominique and Randy, Sheena, they're all in the background making all the magic happen. Of course, Angel Heyman, and of course to Lynn and to Derek and to Jamal. Just thank you, gentlemen, so much for an amazing session. Everybody have a wonderful rest of your day. We look forward to catching up soon. Good night, everybody.